Welcome to Thoughts on the Market. I'm Jens Eisenschmidt, Morgan Stanley's Chief Europe Economist.
And I'm Regiane Yamanari from the European Equity Strategy team.
Today we are discussing one of the most urgent challenges Europe is facing right now, a declining working age population, and its implication for Europe's economy and potential solution. It's Wednesday, October 23rd at 3 p.m. in Frankfurt.
And 2 p.m. in London. So Jens, people are getting older around the world, living longer, although the rate of change is different from country to country. Can you tell us what's the situation in Europe right now?
Yes, Europe faces a declining working age population. So much is sure. We have just put out a big report where we come up with numbers around this issue. We think for the large four euro area countries, Germany, France, Italy, and Spain, we see a decline in euro area working population by 2040 by 6.4%. People also get older, so that doesn't necessarily mean the overall population is declining by as much. It simply means that working age population, as a sort of most direct, relevant measure for the economy, is declining.
Why does an aging population hamper economic growth?
So think about the economy producing, in a very stylized sense, with two factors. One is capital and the other one is labor. And typically, these two factors are connected. So you can't really produce just with one factor. Typically, you need at least some labor to produce something, or at least some machinery to produce something with labor. So it's a very simple way of looking at the economy, but typically very powerful in explaining what's going on. So if we take this approach and look at our economy through the lens of these two factors, and we have one factor declining significantly, this will affect the amount the economy can produce. So we are talking here about so-called potential growth or potential output. And we think the declining working age population will lead to a decline in potential output for the euro area economies I was just mentioning. We think it could be around 4% over the period from now to 2040. And that amounts to, on an annual basis, around 25 basis points lower growth potential.
Suppose policymakers want to boost Europe's working age population, which they do. What options do they have? Which European countries most benefit from these policies or options?
Yeah, the oldest policy measure, or if you want, the most discussed one, typically has been birth rate. Now, many of the policies being implemented here, and they have been implemented for decades already, have been found to be not really changing the situation in a profound way. So birth rates have either stopped increasing again or actually continued dropping. So policymakers' attention, probably for this reason, has turned to other measures. Other measures we think of here mostly in the current debate is increasing net migration. So you're basically getting your working age population replenished to some extent from the outside. Changing participation pattern in your own domestic labor market. Typically, it's framed around the question, how much or how high is the share of one cohort versus the other? For instance, males versus females. We have countries where there's a large gap between these two groups, just to name an example here. And closing that gap could help you increasing or offset some of the projected decline in working age population. Another measure that's often discussed is increasing retirement age. So essentially, working age population is defined by those aged between 15 and 64. And of course, if you work for longer, so you increase retirement age, that will also help to stem against some of the projected decline in working age population. Now, if you look around for the countries that we are discussing in the report, then there are different ways these policies affect these countries. So for instance, in Italy, closing the gap between male and female labor force participation would offset a large part of the projected fall in its working age population because that gap is so large. In France, in terms of our numbers, the most effective measure would be increasing the retirement age. And again, in Germany and Spain, it would probably be migration policies that are most effective. Okay, now let's consider the alternative, Regiane. Suppose nothing changes. There are fewer and fewer working age people in Europe. How would this affect companies' earnings growth?
So if there are no policy action And here, assuming all else equal, no change in productivity, for example, due to a lower GDP growth, we estimate the headwinds of European demographics could lower companies' long-term earnings growth by 90 basis points, so from 5.1 to 4.2% by the end of the decade. And this compares to an average growth of 6.4% that we had in the past 10 years.
And how would this be reflected in the stock market?
Yeah, so potential lower earnings growth is negative for European equities, right? But it's worth highlighting 2 points here. First is that European companies have been diversifying their activities and revenues across the globe in the recent decades. And the revenue exposure of European companies to developed Europe, including the UK, has reached a 30-year low. So we estimate that just 38% of European companies' revenues are generated in developed Europe on a free float market cap weighted basis. And second, I think we see this impact being more idiosyncratic at sector, at stock level. Just to give an example, so we have this factor analysis that we have done. We found that companies reducing headcount in Europe have been outperforming companies increasing. So in our view, this impact, it will be idiosyncratic, and it will depend by sector and the stock.
What sectors and industries then do you expect to be most affected by an aging population and the declining labor force?
Yeah, so first of all, I think one thing to mention is that it's very clear that the theme of aging population is gaining traction in European C-suite commentary. So we found using AlphaSense large language model, when we analyze companies' transcripts, a notable rise in mentions of aging population. And in particular, if we compare to the US companies, we know that labor-intensive industries like cap goods, construction and materials, business services are among those at the top of the list. And those mentions have been increasing in most cases when we compare to the average of the last 5 years.
So how are companies adjusting their business models to account for these challenging demographic trends?
So we see, for example, industrial automation, robotics, and software adoption accelerating in the face of declining working age population across Europe, which might surprise some people. It's relatively underpenetrated by technology. For example, if we look at industrial robot density in Germany, that is less than half of South Korea. And there are some sectors, for example, like hospitality, that our analyst has flagged that the companies have been changing and adopting initiatives related to recruitment, technology adoption, portfolio rationalization, just a few examples here, and adjusting their business models as well to navigate a scenario of reduced labor availability and higher costs. And not to mention AI, which we have seen a rapid development and pace of adoption as well.
I'm glad you mentioned AI. It was on my mind. I was about to ask you. So what do you think the role of AI could be in helping with the demographic challenge?
And our view is mainly on productivity gains. So we expect them to start materializing, but they are likely to be small and grow consistently over time. An important portion of AI adopter companies' cost base are related to R&D, marketing, distribution costs. And these areas, we still are to see broad-based application of AI if this is really to be meaningful at a corporate level or even a national level. So the way we see is that the productivity gains being reflected on margins, but still to be small at this level.
So this one remains to be seen. We will surely be watching closely whether AI can deliver what it seems to be promising to generate productivity gains to offset the demographic challenge. Regiane, thanks a lot for taking the time to talk.
Great speaking with you, Jens.
And thanks for listening. If you enjoy Thoughts on the Market, please leave us a review wherever you listen and share the podcast with a friend or colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.